and welcome to my real-time options trading, where I trade a real account with real money right in front of you. Now I'm totally transparent as I share my account value live on screen. And I've been trading options online for 28 years now, and I'm here to share how it's possible to trade options with less risk and how you can even follow my trades if you choose to do so. I must say that trading is risky and it is possible to lose money following my trades. My purpose is to help people learn how to trade a proprietary trade I developed called the safe wheel strategy. The wheel strategy, as it's known today, is a popular strategy, but it comes with major risks. And I'm here to help people learn a wheel strategy that does not carry all the normal risks. Now, I've seen people follow the old school wheel strategy that many YouTubers tout, only to end up becoming frustrated and lose money. If you're interested in a conservative, effective approach to trading options for free, you're in the right place. If you're interested in the backtest results of the proprietary safe wheel strategy that I developed, I've made a video on that and I left a link in the description. Okay, here we go. Today is Monday morning, 7:15. First thing I'm going to do is I want you guys to go ahead and start posting your questions right now, so they're not, being posted at the end there. That way you get your questions answered if you have any. Um, Second, I do want you guys to know I'm going to put a link in the description for the safe wheel guidelines and the flow chart. So there's a flow chart available on how to do this strategy. Um, and I hope you guys can see my screen today. I think you can. Let's see if I can find my mouse. Yeah, so I increased the screen size, so I think you guys can read it now. Um, Let me briefly go over my options earnings edge here before I make my trade. Basically, my goal here is to win 3 out of 4 trades, and if I can do that based on the sizing, I'll be able to make about 10% a month. And I know that's kind of crazy high numbers, so there is some risk and volatility with this. But you can see my last 3 trades were winners. So you can see my first 1, 2, 3 trades were losers. But I think I made a couple tweaks to the system here, and hopefully we can mine this edge right here. And I'm shooting for on a $5,000 account to make about 300 bucks. So my last 2 were winners. The other one was about a half winner. So I'm starting to get the hang of this. And if you want to join me, there's a link in the description there. Okay, let's go back to Macy's. So what am I going to do here? Well, what have I done? Let's see. So I've been assigned 100 shares at the $25 level, and I have my put hedge here. Okay. So I still have my hedge on because you don't want to be selling options without a hedge. Uh, that's just not a good way to go about because eventually you're going to get caught. A lot of people have gotten caught here recently. So you just don't want to have an option premium selling system without a hedge. Okay, so what should I do next? I'm just going to continue the wheel strategy. If Macy's went above, last week I sold a $26 call. So let's see the chart of Macy's. You can see that Macy's actually got up here at about 27. So I thought, wow, okay, I'm going to be called away from my stock. And if I was called away from my stock, I would have started the whole process over. But then look what happened to Macy's. It came back down. So I was not called away from my stock. Oh, look at this. Earnings is coming up. Now, I'm sure there's going to be a question about that. Am I going to do anything different? No, I'm not going to change a thing. I'm just going to continue with the process as if the earnings weren't coming up. I'll get some more premium here next week, which will be nice. And I'm not worried about, Macy's popping too high or popping too low. Doesn't matter. Okay, so what am I going to do? I own 100 shares. I'm going to do the wheel strategy, right? I'm going to sell a covered call, and I'm going to do that in the week, in 1 week, so one that expires Friday. And by the way, I was out of town all last week. I lived in California, went out to Florida, and that's another thing I like about the strategy is I don't have to really look at it. I look at it on Mondays and I look at it on Fridays, and I just take a peek on Friday because I might have to sell that call, and I can take vacations. I mean, this thing. One of the things I like about the systems that I always set up is it just doesn't take a lot of time to manage it. Like I just come in once a week and manage it basically. I'm not going to get put a system together really where I have to be there every day kind of thing. I just I wouldn't trade something like that. Okay, so I own 100 shares. I'm going to sell a call. Which one am I going to sell? Well, I was assigned at 25, so I'm going to make sure that I sell something more higher than 25. And the 26 looks pretty good to me. I want to get at least, well, 25 cents, that 1%. That's my minimum requirement. There might be times where I'll take less, but for the most part, that's my requirement. But at 26, I'll still make a dollar if I get assigned, and um, getting good premium right here. So I'm going to sell this one. I'm going to sell one because I own 100 shares. The mid price is 38. I want to get as much as I can. I might throw in 39 there, and probably have to move it. Maybe 37. Went down to 36. Okay, so it looks like it got filled there at 37. So bring in $37. Now, what's different here compared to other wheel strategies is that I'm going to buy something. I'm going to buy a put around that 5 cent level, and that's to protect my hedge because my if the stock just pops up really high, my hedge is going to go down significantly in value, and I need to protect that. So I'm going to pay $5. Buy one. Okay. So let's see where we are here. Okay, so now I've collected more premium. Now I'm collecting more premium than what I'm going to lose with my hedge. Okay, so you want to make sure you do that. Obviously, that's part of the system. And those are really the trades for today. So let me get into questions. So, question number one here. How do you pick stocks for the strategy? So I kind of use about three different criteria. Number one, I want to make sure I pick a stock that's extremely liquid. So when I look at the bid-ask spread, see these bid-ask spreads are really close, 17 cents, 19 cents, 25 and 27. That's a good stock. Second, I want to do something around $30 because that helps me with my sizing. So I'm using a $5,000 account. I'm going to use something around $30. If it gives above 40, I'm going to kind of get out. If it gets below 20, I'm going to kind of work my way out of that stock. But this one stayed around 25, so we're just hanging out here. So around $30, between 20 and $40. And then also you want to make sure that when you go to sell a put that's out of the money, you want to get at least 1%. So if it's a $25 stock, you want to get at least 25 cents. So let's just say that it's a $25 stock and the at the money is 25 cents. Well, there's just not enough premium there. It's got to be out of the money with that particular amount. So those three criteria are the main criteria when picking a stock. Okay, let's see. It needs to be something, okay. Here. In your back test, what is the normal yearly ROI? Around 10, I believe it was around 10 to 12%. Is what the back test showed from 2017. With not a lot of volatility, didn't have big drawdowns. I can't remember the highest drawdown right off the top of my head. It might have been 5 to 8%, something like that. Philip here says, "Can I support you?" I'm not sure what that means. Um, This question, how's the three-step doing in this market? Well, it's actually called the five-step. Uh, it's doing fine right now. I had a January was pretty rough for it, but we're here to talk about the uh, safe wheel. So let me get back to that. Why do you use 5K account to trade only one lot? I could do two lots. That is correct. And I need to keep that powder dry because there's times when I do add a second lot in this system. There are times when I need to add a second lot because I get to a point where I have no, I'm in the stock, but I can't, so I'm not out of the stock. So I'm in the position and I can't sell anything. I don't, there's no premium out of the money. And so I need to go in and add another lot to the, to the trading system. And eventually, if I run out of premium with a second lot, that's when I take my loss. Okay. Your puts are 95 days, 150, 200 is recommended. Yeah, because the reason why I go 150, 200 is so I have enough time. Uh, I'm getting close to a depreciating situation here with those 95 days left, but I still have quite a bit of time left. And I want to make sure that the options that I'm selling, which are near term, are vastly outweighing the depreciation of the 150 to 200. Even if I get to 95, I'm still ahead of the curve. There's going to be a point where the depreciation on my puts, my hedge, is going to outweigh the depreciation that I can sell. And at that point, I need to get out. But typically, that doesn't happen. What happens is the market will go higher, or the stock will go high enough to get me out of the position, or low enough to get me out of the position before uh, the hedges depreciate faster than the weeklies that I sell. Okay. Does this system only work at the $30 stock level? No, I mean, if you had $10,000, you could do it with a $60 stock and do one lot. Um, so I hope you get an idea of what I'm talking about as far as sizing. A $60 stock, if you have 10,000, you do one lot. Uh, if you had $10,000 and you're doing with a $30 stock, you do a two lot. So I hope that makes sense. Let's see here. Still did not clear to why you have three protective puts. I remember you said in the case you need to adjust the position. The three protective puts is in case the stock falls significantly. I think my first batch or my first cycle, the stock was down low enough to where I did cash in the puts. So if you look at from the beginning, you can see how I use those puts, if I remember correctly. But there is a point where the stock will go down far enough to where I need to use those puts. If you do adjust the three long puts, do you roll them or close them out and reestablish from scratch? Um, if Macy's would go higher, say it went to 28 or 29, I would actually roll those three puts up. I would kind of chase that stock up higher if I still had stock. If I still had if I was still in a position that I needed to stay in. Now, if Macy's went to 28 or 29, I'd be called away and I would just start all over again. But there are circumstances where you do roll those puts up, and you can get that. I have that safe wheel guideline and flow chart, and it'll tell you when, it'll go over when that happens. Since this is 1 week covered call, why can't one put? Okay, so because the puts are further out, because I want something that has less depreciation, I need to buy more of them because just one put is not really going to cover the potential loss of the trading system, especially if I have two lots on instead of one lot. So I need to have more than one because the deltas are lower and they don't move in conjunction with, I'm going to say, so the puts, I need 3 of them. I don't know, I just calculated that out that I needed 3 of them. If I used 1, then I would be having that depreciation, that quick depreciation, because I'd have to come, I'd use 1 maybe within the same cycle, and they would depreciate just as fast as the calls. So I needed something that did not depreciate as fast, and if I use something that does not depreciate as fast, then I need to use more to protect, my potential of having 200 shares. I hope that makes sense. Okay, that looks like all of the questions. Oh, wait, here's another one. Let's see here. My buddy Uric Hunt says that hedging with 3 puts would put you out of the money. Well, it just depends on whether you would be in the money or out of the money, but those puts are definitely out of the money. But if you bring those 3 puts into the money, they're going to be pretty profitable, and the system will make money if you drop significantly. Rob Dog. Okay, I'm going to go ahead and end the live stream unless there's any more questions. And again, we have a system where we really only need to be here once a week. Yeah, we check the stocks on the end of the day on Friday and sell that call that has any value. But other than that, uh, we take some time off in between. Thank you guys.